It's time for the new year and New Year resolutions. A big one for me is balancing my time and simplifying my life. That's why I've been investing so much into ETFs the past few years. They give me peace of mind, built-in diversification, and I have so many options, sometimes too many. No joke, there are literally more ETFs out there than stocks on the stock market. So finding the right ETF for you isn't easy. All my life, I've been using websites like Yahoo Finance and reading through the ETF fact sheets from Vanguard and BlackRock. That's the hard way. It's not fun. If you've tried reading these, I'm sure you'd agree. Now I have a one-stop shop. I could do all my research, compare different options, and then buy the ETF right there with a click of a button. And that's thanks to Moomoo. Hey guys, it's Adrian here, the Canadian in a t-shirt. And today I'll break down how to easily build your own ETF portfolio with a clear strategy and how to do it in a simple and cost-effective way. I'll be using Moomoo to walk through my strategy today. I've already made a full review of Moomoo's research tools for stocks. Check that out. But this video is all about ETFs. I've been using Moomoo for about 2 years now, and I'm not kidding. They've made my life so much easier when it comes to research. And they've saved me a ton of money in fees. So thank you to Moomoo for sponsoring this video and giving me the tools that I need. Like I said before, there are so many ETFs available. It can be hard to choose. The strategy that I use to build my portfolio is the core satellite approach. This makes building an ETF portfolio simple, structured, and flexible. Here's how it works. The core is long-term ETFs, boring, low cost, and diversified. The satellite, those are smaller positions in more specialized areas. Things like sector ETFs and even shorter term plays like single stock ETFs or leveraged ETFs. The core is my foundation. That's the meat of my long-term portfolio. The satellite gives me flexibility to play with the market without risking my whole portfolio. Let's start with the core. That's the most important piece. Inside Moomoo, under the ETFs tab, you can easily find index ETFs from both the US and Canada. These are broad market funds that track the entire economy. This covers all my bases. Over the long run, US index ETFs have delivered undeniable, incredible performance. Just to give you an idea, if you invested $100 a week into the S&P 500 over the past 10 years, you would have put in $52,000 of your own money, but your portfolio would have grown to over $110,000. That's the power of consistency. Our Canadian market has also seen great success. Historically, the US economy grows a little faster, but this past year, the Canadian market has actually beaten the S&P 500. That's why it's important to invest in both markets. Don't neglect one or the other. I get it that it seems easier to stick to Canadian dollars, but that's why it's so important to use the right brokerage for the job. With Moomoo, there are no added currency conversion fees between Canadian dollars and US dollars, and the exchange happens instantly, so you don't have to wait for days like you would with Norbert's Gambit. The exchange rates are also much more competitive compared to traditional banks and many other brokers. Watch my fee comparison video right here. Converting into USD with Moomoo was literally 17 times cheaper than a broker like Wealthsimple. So don't throw your money away with those high fees. Moomoo also supports Interac e-transfer, which means you can deposit Canadian dollars and start trading within minutes. For me, I like speed, simplicity, and low costs. That makes a big difference. For my core ETFs, it's not about timing the market, it's about time in the market. So the best strategy is dollar cost averaging. Like I said before, this year I'm focusing on simplicity and convenience, and the backbone of my strategy is based around consistency. Buying the same quality ETFs every month, whether the market is going up or going down. That's what we call dollar cost averaging. You take the emotion out of it, the fear, the second guessing, the uncertainty, throw it out and stick to your schedule. Turn investing into a habit that you do no matter what. Every month or every 2 weeks, I'm going to invest in the market. Let's say the S&P 500. This consistency is the key to long-term wealth, and the best way to stick to it is to automate it. That's where Moomoo comes in thanks to their AutoBuys. Let's see how it works. On the Moomoo app, go to Accounts, then More, and click AutoBuy. On the bottom, hit Create Plan. Now we enter the stock or ETF we want and enter your details. We can also get here from the quote page directly. Say we were looking at VFE, a popular ETF. At the bottom, hit ... and AutoBuy. enter how much you want to invest in automatically. The minimum is $10, and you can do this in Canadian or US dollars. Let's say I want to invest $100 every 2 weeks. Set your frequency every week, every 2 weeks, every month, even every day. I'll set it every 2 weeks on the Thursday. That's when my paycheck comes in, and boom, it's done. Now, every 2 weeks when I get paid, I'm going to automatically buy $100 worth of VFE. Once you've established your core ETFs, say about 80% of your portfolio, now it's time to think about the satellite portion. This is where you can make more strategic decisions based on short-term and long-term trends. These satellite plays are usually based on either a specific sector, even a specific stock, or a short-term market theme. Remember when I said that now there are more ETFs out there than stocks? Well, this is why. Now we have countless ETFs for any sector or industry you can think of. And even for individual stocks, there are a ton of variations on that one stock, such as leverage ETFs or inverse ETFs. For example, if you're confident that Tesla will blow up next quarter, sure, you can buy Tesla stock directly, or if you're more aggressive, there's a 2x leveraged Tesla ETF to double down. On the flip side, if you expect Tesla's earnings to disappoint next quarter, you can bet against it with an inverse Tesla ETF. Remember, the market is risky and unpredictable in the short term. And when you use leverage like 2x, yes, you can magnify your wins if you're right, but if you're wrong, you'll magnify your losses. Be very careful. That's why you have to prioritize your core portfolio first. That's your backbone that you can count on. Your satellite position is much smaller, so you can afford to take on a bit more risk. When it comes to ETFs, there are so many options. It can feel overwhelming. How do you pick the right one? That's why I love Moomoo. They help you find what you're looking for with specific lists and even custom screeners. Let's say you only want high dividends with a yield above 3% and that pay their dividends monthly. There's your list. It's not just dividends. You can choose any filter you want. It's really cool to have this much functionality right on the app, and it's all free. Back to the Markets tab, there's more ways to find inspiration. Here's a list of the highest dividend yielding funds. You can sort them by dividend yield and filter monthly or quarterly dividends. Here's a list of single stock ETFs, and right below it, leveraged ETFs and inverse ETFs. I especially like the thematic ETFs, a curated list of investing themes and trending ideas. Let's say I want to focus on the infrastructure theme or artificial intelligence. This is a great source of inspiration. Below, we have featured lists. Here we can see sorted lists based on the most actively traded funds, the biggest gainers and the biggest losers. If you want to hear from professional analysts, down at the bottom we have Morningstar ratings. Normally you have to pay $250 a year to access Morningstar analysis, but with Moomoo, we get this for free. I'm telling you, the value of these research tools is amazing. Now, you should never blindly follow an analyst, but it is useful to hear them out and then make your own decision. This is a cool feature I want to highlight. Let's say you've narrowed it down to a short list. You can compare two ETFs side by side. You can even add a third one. Let's add XIC. This is so cool, and it's not just the graph. You can also compare all the ETF details, their performance, Morningstar ratings, their AUM, how big these funds are, their management fees, number of holdings, dividend yields. You can see a list of their top 10 holdings and their top 5 sectors and their geographic breakdown. This page alone is an absolute treasure trove, and I can't believe that Moomoo gives it away for free. Definitely use this feature to narrow your search. Once you've picked an ETF, the final step is to understand what you actually own. What's the ETF's objective and what's inside it? You'll find all of that on the quote page. Here you'll see all the standard metrics like open price, close price, volume, AUM, dividend yield. I covered all these details in my stock analysis video a few months ago. Very similar steps for both stocks and ETFs. But here's the stuff unique to ETFs. Click the summary tab and you'll see a high-level overview of the fund. It's issued by Vanguard and tracks the S&P 500 index. Here's the management fee, 0.03%, and you can read its objective. You never have to leave the app. I can even download the ETF fact sheet and annual report directly from Vanguard. I literally don't need to go on Vanguard's website anymore. Everything I need to know is right here on Moomoo. This is a game changer. Scrolling up, we have the dividend section. I can see all the dividend payments and it's growing year after year. The same thing we saw in my stock analysis video, so I'll skip over this. For ETFs, this is very important. AUM, assets under management. This is how much money is invested in the fund. Basically, how much the ETF is worth. You want to see the AUM growing year after year, and that's exactly what you get with VOO. Good news. This is the most important part, here in the breakdown. Remember, an ETF isn't magic, it's literally just a collection of stocks. So, a good ETF needs to contain good quality stocks. We can see all of the holdings inside the ETF right here on the app. VOO contains the 500 biggest companies in the US. So we see Nvidia worth 7.4%, Apple worth 7%, Microsoft 6.2%, Amazon, Alphabet or Google, Meta, Tesla, and so on. Hit the window icon for multi-chart view. This gives you a snapshot of the underlying holdings. If their holdings are growing, then the fund will grow. That's what I want. We can also get a breakdown of asset classes, stocks, bonds, or cash. This one is all stocks. Now for geographic breakdown, click regions. Again, this is all in the US, but this one is absolutely key. Click on sectors. Here we get a clean visual breakdown of what this fund contains. We see the biggest slice, technology at 35%, financial sector at 12%, consumer cyclical at 10%. That means the non-essential goods, like cars, electronics, and clothing. When I'm evaluating an ETF, the sector breakdown and holdings breakdown are my most important factors by far. Again, for years, I had to rely on the Vanguard or BlackRock website to see these numbers. With Moomoo, I get it all on the app. Clean and clear graphics, and it's totally free. I absolutely love it, and it's made my research so much easier. It also helps when I produce videos for you guys. Everything I need to know is all in one place. If you love ETFs like I do, give Moomoo a shot. I promise they'll save you a ton of time. And make sure you use my referral link below. I was able to secure a fantastic bonus for you guys. Sign up and deposit $500 and you'll receive a $100 cash bonus. That's already a 20% return right there. Even better, deposit $5,000 and you'll receive a $300 bonus. This is one of the best sign-up bonuses I've seen. Click my link below to see more details and you'll see my custom landing page with Canadian in a t-shirt. That's how you know it's working. On top of the sign-up bonus, you can also get a transfer bonus. This is a separate bonus and you can collect an extra $300 if you transfer at least $10,000 in assets from your bank or brokerage. So use my referral link below, take that bonus money and invest it. Thanks again to Moomoo for sponsoring this video and for the great sign-up bonus for my viewers. Thanks for watching and I'll see you guys on the next episode of the Canadian in a T-shirt. Bye guys.